President Trump's recent financial disclosure showed he made $1.4 billion off the cryptocurrency ventures. CNBC spoke to the president about the issue this evening.
In the disclosure this week, the amount of money that you and the family made in crypto, it was an outsized number. I was just asking, were you know about the crypto ventures? So that was just something.
By the way, I could know about it. I didn't.
Right.
I mean, there's nothing illegal. There's nothing wrong with it. I could know.
There's a specific. I remember Title 18, Section 208 from Congress. You, the Vice President, and you do not have. You would have to recuse yourself.
I didn't even know that.
You would have to recuse yourself on every decision that could running the country that could have anything to do with you. So it just isn't feasible to do it.
Joining us now is Shehan Chandrasekera, a CPA and the head of tax strategy at CoinTracker. All right, let's break this down. Thanks for joining us. President Trump's crypto earnings could be taxable, could be with one accountant estimating the president could owe at least $250 million. Do you agree with that assessment? And does crypto change how taxes are actually calculated?
Based on the information we have, it's very hard to estimate exactly how much his tax bill will be because these disclosures have very limited information. In order to calculate taxes, you need number of coins somebody has, how much you paid for that coin when you purchase it and stuff like that. So that information is missing. But at the same time, we do have a sense of how big these numbers are. So it makes sense to people to think that, okay, the tax liability will be at least in the low hundreds of millions of dollars, all else being equal.
What are some of the complications, or might we say challenges, to figure out just how much the president might owe?
Right. So the main holdings he has is Bitcoin and Ethereum, worth value over $100 million. In order for us to calculate the tax liability, first of all, he has to sell the coins, and he hasn't done that, so there's no tax liability there. When it comes to staking income, which he gained from Coinbase and etc., that's considered taxable income at the time you receive it based on the market value. But in the disclosure, we don't know if he reported that information to the IRS and paid taxes or not. And then he does have pretty large chunk of royalty and other realized proceeds coming from the World Liberty Financial token proceeds. But one key thing is missing here, which is how much he paid for those tokens, the cost basis. Right now, the disclosures only show the proceeds, meaning how much he sold it for. It doesn't show how much he paid those tokens. So without that cost basis number, it's very hard for us to estimate the tax liability. And the other thing is, this is just a crypto tax fees. I'm sure his taxes are super complicated. He may have losses coming from previous years, depreciation, other etc. that could shield some of these gains as well. So at the end of the day, without looking at his entire tax profile, it's very hard for us to assign a tax liability for the crypto portion.
How much would you charge for figuring all of this out? Just kidding. Just kidding. We'll leave that one alone. All right, Shehan, thank you so much. Appreciate your time.
Thank you.